Good morning, everyone. My name is Don Daniel, founder of Pill Method International, a better way to eliminate debt. And today, we're going to be talking about this down payment idea. All right, how do we save money on interest? What is the best way to buy the home? We have heard time and time again, should we put a large down payment down to save interest, to cut the payment down? Is it going to be better? Is that the best use of our dollar? All right, folks. Again, I'm the founder of Pill Method International, a better way to eliminate debt. And for the last 16 years, we've been helping people understand how amortization actually works and how people can save money on interest, pay off all of their debt in an average of 7 to 9 years by focusing not on the interest rate, but the interest cost. Managing interest cost is where this thing is. And folks, we're talking about, this is a red pill, blue pill situation. Good morning, Miss Stephanie Rice. How are you doing? Jeremiah Sam's online. We have Dawn in the house. Good morning, Dawn. How are you doing? And make you moderator here. And listen, folks, this is going to be an exciting time. Understanding these numbers, I get to talk to people all the time about about these things and watching the light bulbs come on. Not only just for consumers and residential home buyers, but I get to talk to people who are in the multifamily space. I mean, these projects are multiple millions of dollars. And we get to talk about how everybody can save money on interest because we look at it a different way. Good morning, Dawn. How are you doing?
Amazing. And yourself?
I'm doing well. Thank you very much. Are you out? Are you going to be out walking today?
I will. You need me to stay put.
All right. So hopefully I get a chance to do it. But by the time I get out of here, Dawn, it's going to be like 90 degrees. So I see why you do it in the morning.
Yeah, because if I don't do it in the morning, it's likely not to happen. So I try to hurry up and get it over with.
All right. All right. Well, listen, I need you. Listen, you can chime in anytime you want on this subject about making large down payments on the loans. We want to get some people in here so that they can actually see these numbers. Folks, if you're in the audience and you know somebody who's getting ready to buy a home, and one of the things that they're talking about is making a large down payment and putting themselves in a better financial position, we're going to talk about that. And I'm going to go on record right now to say making a large down payment on a home does not put you in a better financial situation. There's a better way to do this, and we're going to talk about it today. Can I get just a few people to share this room? I'm going to be first to get this out here because we are going to be talking about, man, this stuff is going to be fire today. We're going to be dropping some gems. And if you are thinking about buying a home, put a number 9 in the chat. If you're thinking about refinancing, put a number 9 in the chat. If you're thinking about leveling up and buying a second or third home, put a number 9 in the chat, because we want you, or if you know somebody who's getting ready to do this, this is going to be valuable information for all of you. All right. So put a number 9 in the chat if you are going to buy a home, a first home, buy a second home. If you know somebody who is buying a home or even investment property. All right. And you're going to, you have the cash available, and you're looking at how to deploy that cash so it works for you in a way that is going to save you time and it's going to save you money. All right, we have some people in the room, and if you have any questions about this, please raise your hand. come up to the stage, and let's go ahead and share this room a little bit more. We got Miss Israel in here, Tiffany, Jessica, we got G, we got Naomi, we got Tanya. Listen, folks, if you want to see what we're doing, let me go ahead and pin my link to the top here and do that. Let me do that quickly and easily without hitting the wrong button. All right. And let's see here, ice10k.com. All right, there's the link. All right. And if you want to see these examples, I'm going to put the numbers actually on the screen. If you have your computer or if you have a tablet and you want to see these numbers, then go right ahead and click on the link, and you'll see several different ways that you can watch us live. If you want to go straight to YouTube, you can go to ice10kvideos.com and you can go straight to YouTube from there. Or you can click on my link, find that button that says, we want to watch live on YouTube, Facebook, LinkedIn, or Twitter, and you can see all of this going on today. And I'm getting ready to put some additional information on the screen. And we're going to go over that today. Hold on, let me see here. Get my, all right. And all right, I got some wires in the way, folks. Get my wires out of the way. All right. All right, folks. Here's an actual situation that we went through. In fact, I've actually got a PowerPoint on that. Let me bring up my PowerPoint. I think I want to do it from the PowerPoint. It's called Down Payment Deception. And thinking that having that down payment is a good idea. We're going to go over that today. Miss Dawn, do you have any input into making large down payments on loans?
Of course I do. I always have input. So for me, I thought that the best way was to put the down payment on the loan, and then I learned the amortization schedule. So I'm not gonna steal the tea. I'm gonna let you show them, but they will be absolutely surprised on why they should do it the way that you're gonna teach it.
All right. Well, I'm going to put this on the screen here. I've got. Let me see here. I've got to hit this to see how it's going to show up on my screens because I use 3 screens. All right. And all right, that's going to show up on screen number. All right, let me get out of here. All right, that's going to show up on that screen there. All right, so we need to share. All right, we need to share this screen. Let me get out of here. Share this one. All right, folks, we're going to get into this. I think you're going to like what you see. This was actually a neighbor of mine. He used to live across the street and went through this exact same scenario. All right, so we're going to share screen number 2. All right, and start the show. All right, so we're sharing screen number 2. And oh, wow, wait a minute. Not yet, not yet, not yet. I've got to move. Let me move this over here. Get that out of the way. Move this here. All right. And there we go. All right. So we're going to now put this over here. All right. And now share the screen. There we are. All right,
Dawn,
folks.
I actually learned how to watch while I'm on my phone in Clubhouse, and somehow I've been able to figure out how to do this on and see you live. So let's see how this works today.
Oh, really? And you mean from your phone?
Yeah, it looks like I just opened up YouTube and then
Right.
I was able to minimize the screen. So now I have YouTube on the top and I have you on the bottom. I have the sound turned down low so I can't hear you on YouTube. But
Right.
yeah, I can see
You know
you know,
that.
it's a couple seconds delay, but I can see both of them.
You know that's right. You can do that if you minimize the screen. I just thought about that. That's true. If you minimize the screen, you can make that happen. All right, folks. Let me get to this example, and there it is. Boom. All right. Down payment deception. You should be seeing that on the screen here pretty soon. And let me, all right. Let me see here. I'm going to bring this back up and put it over here. There we go. So I can see everything. All right, folks, this is called down payment deception. All right, so let's invite a few more people in so that they can see this. And if you do what Dawn said, if you go to YouTube on your device on your phone, minimize the screen. All right, that way you can see the example, and you can still hear on Clubhouse. All right, and this is going to be good. All right, so here we go. And if you want to ask any questions along the way, please raise your hand so that we can understand what's going on. Okay, so down payment deception. Here's the situation. We're talking about putting large down payment on houses. All right. So here's the situation. All right. Local businessman. All right. Building a $400,000 home. And he asked me a question. Should he put down? Now he put down the minimum to get into this. Says, can you add the YouTube link? Yeah, I can add that. It's ICE 10K videos.com. Let me put that in here. ICE 10K videos. Um, there we go. There we are. All right. So he asked, should he put an extra $100,000 down on this $400,000 house, on this $400,000 loan, so he can finance $300,000 instead of $400,000 at 3% for 30 years? Folks, that's how this has been taught forever. All right. It's been taught this way for a very long time. All right. We have 14 people in the room. Let's go ahead and share. We only have 3 shares though. Can I get a few more shares to it? Because see, it's harder for people to see us in the hallways these days. So if you share, this goes out to people who know you and see you. And when they see you in here, they'll come in too. So if I can get a few more shares, go down to the bottom of the screen, hit that button that has the square and the arrow coming out of it, hit that and share it on Clubhouse. All right, very good. So now here's what's going on. He asked if he should put $100,000 down so that instead of having a $400,000 loan for 30 years, he would have a $300,000 at 3% over 30 years. So here's what I told him. I told him he needs the $400,000 loan. I first asked him, though, can you afford the payment on the $400,000 loan? He said, yeah, that's not a problem. But that's not my issue, is not being able to afford the payment. My issue is I want to save money, and I think I'd be in a better position if I had a $300,000 loan as opposed to a $400,000 loan. So let's take a look at it. So we're going to put this up side by side, folks. Here's a comparison. On the left side is the $400,000 loan. If you're new to the room and you want to see this, please click the link above and choose whichever social media outlet that you want to be able to watch us live on, and you can do that. today. Or do like Dawn said, you can go to YouTube right on the same device, minimize the screen, and you can still hear on Clubhouse. All righty. So here's what we're talking about, folks. 400 on the left side is the $400,000 loan. And let's break it down. We got $400,000, and the regular payment, the principal and interest payment, is $1,686.42, and it's 360 months or 30 years. Here is the interest rate, 3%. Total interest paid, this is what he's also looking at. Total interest paid of $400,000 on $400,000 at 3% is $207,111.20. Let's stop right here for a second. Let's talk about this. A 3% loan, and it's for $400,000, but the interest cost is $207,111.20. Folks, already there's something wrong with this. At 3% is $207,000. Is that 3% of $400,000? It absolutely is not. And we're going to talk about what it actually is. Now, he's also looking at total repayment of this loan of $607,000. That is the true cost if you keep this loan for 30 years. That's the true cost. The true cost is not just what you negotiate the price of the home for. The true cost, you have to add in the interest cost as well. And if you do both, you're looking at a $607,000 purchase. And I have to ask the question, do you want to pay $607,000 for a $400,000 home? Anybody? Okay, you can put yes or no in the chat if you want. Does anybody want to pay $607,000 for a $400,000 home? So that's what we have so far. Now, here is now the first scenario, the $400,000 home, that's what I'm promoting. But the businessman, he's saying, Don, if I put $100,000 down, look at this. I will have a $300,000 loan for the next 30 years. My payment is $1,264.81. Man, that's like $220 cheaper each month. Down $220. That's quite a bit. Now we're looking at still 360 months, but the total interest paid is $155,331. Don, the $300,000 loan looks way better right now. Now watch this. Here is what the bank is making on both loans. I need you to watch this very carefully. Total interest paid as a percentage of principal. Here it comes. I'm putting it on. 51.777%. Or 51.77. It's virtually the same. They're making 51% on these loans. 3% loans for 30 years are 51% loans. Banks make their money on the percentages. They really don't care what the payment is, as long as the bulk of that payment comes to them. So either way, they're making money. But guess what? If you give them that $100,000 up front, they're actually going to make more money on this loan if you give them the $100,000 as a down payment. Watch this, okay? Now here's the next slide. So the difference in interest paid over the 30 years is this. So we're going to put the math right on the screen. See, if you're doing this, you want to be able to do the math, all right? And we're looking at the total interest paid for 30 years. It's $207,111.20 minus $155,331. This is how much interest the business owner was talking about. He says, Don, that's a $51,000 difference. In fact, it's $51,779.60 difference. Keep this in mind, folks. For this to happen, the $207,000 figure is a 30-year figure. The $155,000 figure is a 30-year figure. You have to keep the loan for 30 years to pay 207,000. You have to keep the loan for 30 years to pay 155,000, depending on which loan you choose. Here's my question. Do you want to keep this loan for 30 years? That's the bottom line. And if you don't keep it for 30 years, are you going to pay this much interest? Absolutely not. The average client for the P.I.L.L method pays this house off and all other debt in an average of 7 to 9 years. Is that true? Is that true, Dawn? Is that what you're seeing? In an average of 7 to 9 years?
Yes, sir.
All right. So listen, we've got some other folks in here who may want to come to the stage and talk about, is this true that you can pay off all of this debt in an average of 7 to 9 years? If you can attest to that, if you know that's what the P.I.L.L method is doing, please raise your hand, come to the stage, and let's talk about it. All right, folks. We're going to finish this up. 51,779.60. This is what the businessman is focusing on, because this is what he's taught to focus on. He's taught to focus on keeping the loan for 30 years, and here are the 30-year numbers. So here is the amortization schedule for the $400,000 loan. Okay, the very first payment is here now on the screen. I'm saying this is what he needs. He doesn't want this. He wants to put $100,000 down as a down payment. So here's what I'm asking him. Here's your very first payment on the $400,000 loan, sir. $686.42 goes to interest. So goes to principal. $1,000 goes to interest. You make your very first payment. Then I ask him, where is your $100,000? He says, my $100,000 is in the bank. Watch this, folks. Could he now apply his $100,000 to principal right now with the very first payment? Could he do that? If you think he can put his $100,000 down now, put a yes in the chat. Go ahead and put a yes in the chat if you think he can apply that $100,000 now instead of before the loan is established. He can now close the loan, still have his $100,000, make the very first payment, and then add the $100,000 to principal right now. All right. All right. So Priscilla says yes. Lena says yes. All right. Our folks online, Jeremiah Sams is saying yes. Watch this, folks. We're gonna watch these numbers. Remember, it's doing the math that counts. It's doing the math that counts. And look at this. If we do that, we instantly take off 125 payments we don't need to make. 125. We're on line 125 of this amortization schedule. We still have a $300,000 loan. Now, the other reason that I didn't talk about, the main reason that this guy wanted to put $100,000 down was not to save the interest, although that was part of it. You know what his main reason was, Dawn? PMI. He was trying to avoid PMI. That's why he wanted to put $100,000 down. And I said, wow, okay, watch this. So he would still, but he would have to have it paid down to $300,000 to do that, to avoid the PMI. That's why he was putting the $100,000 down. Now, his PMI, we're going to do a little bit more math here. We're going to do a little bit more math here. All right. I'm going to pull up. Let me see if I can pull up I'm trying to pull up my calculator on the screen as well. I may have to switch screens here. Let me see here if I can combine these. So we're going to put a calculator on. His PMI was going to be $227. $227. And all right, can you guys see my calculator on the same screen? I need some feedback. Kirk, can you see it? I think I can. I think we can. All right. All right. So, Dawn, are you seeing that?
Yes, I can see it.
Thank you. So, here's what we're talking about, folks. 200 and he's looking at $227. He was trying to save $227, 227, all right, times 360 payments. Okay. So he says, if I can get rid of that PMI, that's going to save me a lot of money. So we're going to multiply that by 360 payments. That comes to $81,720. That's a lot of money. $81,000 in PMI, $227. Let's do that one more time so you can see. $227 for 360 payments times 360. Listen, when you look at these numbers this way, it adds up quick. It adds up a lot, doesn't it, Dawn? 81.
Oh yeah. Oh yeah. And that's the thing that most people don't understand. They just get trapped in the interest rate. And like you see, you call it interest cost.
Mhm.
That's the difference. And all of these little things add up and they don't see it. So it's like the money monster stealing money out your pocket.
Exactly. $81,000. So he was trying to save 50 some $1,000 in interest and $81,000 in PMI. That's why he was going to put the $100,000 down. All right. So I'm going to keep this over here on the side to bring back a little bit later. Okay. Our $81,000. Now, right now, let's finish this up. If he puts the $100,000 down as a prepayment, meaning I made a payment and before the next payment was due, I made an additional payment to principal. So he's going to take his $100,000 and apply it to principal. When he does, watch what happens. He's down to 125, line 125 on his on his amortization schedule. All right. And here's the breakdown of the numbers. Applying $100,000 as a prepayment instead of a down payment to your $400,000 mortgage will save you $110,000 right now. And some people are saying, Don, what do you mean? You mean off the back end of the mortgage? No, I mean right now. All right. I need you to see this and understand it this way. We're going to go back one slide. Okay. We're going to go back one slide and look at an amortization schedule and see what's happening when the bank does this. If we do what the bank wants us to and make every single payment for 125 months, you will pay this loan down. Do you see at the top here, we have cumulative principal and cumulative interest? If you make 125 on-time payments, you will pay this loan down by $100,575.66. It will cost $110,000 in interest to do it. So you start out at a $400,000 mortgage, right? You pay it down to where you owe $299,424.34. So you're paying it down to here. The bank wants to charge you $110,000 in interest to pay it down to that point. Dawn, is this making sense? Okay, Norman, I
think.
Go ahead.
I think that the way that you explain it,
Mhm.
right, is the way that most people can understand. They probably need exposure a couple times, but the system, the way that we learned to use it. Let me say this: the way that I learned to do it was pay bi-weekly payments or pay a little extra, and that was kind of it. But you never knew how much it was going to save you. And I think that's the key element here that helps you really understand why the way that you teach it is the best way to do it.
Folks, we have 18 people in here right now, and I mean, the numbers are beginning to grow. We have 4 shares. Do me a favor, share it one, even if you've shared it already, share it one more time for me. And everybody who hasn't shared the room, please share it right now, because this information is vital. Understanding it this way is vital to your financial health. To pay this loan down to where you owe $299,000, the bank wants to charge you $110,000 in interest to pay it down to this point. Get that, all right? If you give the bank the $100,000 towards principal, it doesn't take you 125 months to get to this point. It only takes you 1 month to get to this point. Only one. And so you're paid down to the $299,424.34, not over 125 months, but you're paid down to here in 1 month, which means it is impossible for them to charge you $110,000 in interest to get here. So if you can give them that $100,000 at one time instead of over 125 months, Mr. Businessman, here's what you just accomplished. I'm going to go back a couple of more slides. Watch this. Okay. We're back to slide number 1. Watch this on here. Do you see the interest cost on line 1? It's $1,000. That's the interest cost. If he puts his $100,000 down now, he's paid down to line 125. Now, this is huge. This is huge. And if you're clipping, you need to clip this right now. He's paid $1,000 in interest already. If he applies his $100,000 to principal, he's paid down to line 125, not for $110,000 in interest, but for only $1,000 interest. The savings is instant. His equity, normally, he just created over 125 months, he would have created $100,000 in equity, but it would have cost him $110,000 in interest to create that equity. We have created the same amount of equity, Miss Dawn, for $1,000 interest, and we've taken this loan and turned and knocked off 125 payments. This is, well, Don, what's the difference? $100,000 here, $100,000 there. Here's the other difference. If he had put his $100,000 as a down payment, he would still have a $300,000 loan, correct?
Yes,
that's correct. But he would have been at payment number 1 on a 30-year loan. He would have been at payment number 1 on a 30. What do you got to say about that, Dawn?
I'm just saying that's the key. Once I learned how to understand the amortization schedule, that's what helped me pay off. Like, I have 7 properties, 5 are free and clear. Understanding this way that the amortization schedule works is what accelerates the payments and reduce your interest costs. I always talk about the condo in Hawaii, right? We paid $675. We sold 2 years later. Our payoff was $604. You don't usually get that. And we saved, I think it was like over $128,000 in interest.
Okay. Wow. So folks, I'm trying to break this down into smaller pieces so that when you get the replay, it will make total sense. So not only is he on line 125, he's already knocked off. You see 120 payments is 10 years. 120 payments is 10 years. So instead of having a $300,000 loan starting at payment number 1, he's at payment 125, and his next payment would be on line 126 of his amortization schedule. That's actually, he just turned that into payment number 2. Man, watch what else happens here. Watch what else happens here by doing this. If you're new to the room and you want to see what's going on, so I see Johnny just came in and Gary just came in, you can go to the link at the top, click on it, and then you can see how we are watching this live on Twitter, on LinkedIn, on Facebook and YouTube. You can watch all of this live right now, or you can go to ICE 10K videos.com and watch it, go directly to YouTube. If you're on your phone, you can, and Dawn just pointed out that you can go to ice10kvideos.com on your phone and it'll take you to YouTube, and you can reduce the screen so that you can reduce YouTube so you can still hear it on Clubhouse. Make sure you just turn your volume. Make sure that the volume is off. You can click that little sign there that makes sure that you put a line through the volume on YouTube, so it won't mess with. So you're not trying to hear both on YouTube and on Clubhouse. So now you can do that as well. Now, folks, here's what we're talking about. And I just wanted to get the new people in the room so that they could see what's going on here. This is a gentleman who had the opportunity. He's building a new home. He said, I want to put $100,000 down as a down payment. I'm saying, no, you don't want to use that $100,000 as a down payment. Establish the $400,000 loan and then put it down, and then put your $100,000 down as a prepayment to this loan. If he does that, he's on line 125 of his mortgage schedule. And let's take a look at the rest of what happens here. Okay. He just saved $110,000 right now. That means he's knocked off 10 years and 3 months worth of payments by putting his $100,000 down as a prepayment instead of a down payment. Miss Dawn, $100,000 is $100,000. But when it comes to amortization, it is a big difference on how you use that $100,000 as putting it down as a down payment and putting it down as a prepayment is a huge difference, isn't it? Folks, this is what
Absolutely.
we are talking about. Mr. Go ahead.
Yeah, I just think that.
Oh, the Matrix has got you. Try it one more time.
And so for anyone that is on that prime deal breaker, this is the game changer. This is the game changer.
Okay. You're out walking now, aren't you? Because you're stuck in the Matrix. Listen, when you get a better signal, please come back. Just start talking. All right. Because we want to hear what you had to say about that. All right. So as your phone switches over from your Wi-Fi to data, so go back and just come back and let's hear that again. So folks, come on, keep sharing the room. All right. And we have, let's see here. We have some folks that raised their hand, and let's see who this is. All right. All right. And we'll give it a shot and see if we can invite them to speak. All right. We've got Rama. All right. Rama, how are you doing today?
Doing well yourself?
Doing well. Thank you very much. So do you have a question or comment this morning?
Yes, I actually have a question. So I just bought a house a couple of months ago. First time buying a house. And the example that you're using, this person had like $100,000. I went through NACA, so I already had a lower down payment for the house, and I don't have any PMIs. But the thing about it is I don't have like that extra money. So I was trying to do is make a monthly payment schedule, or, make additional payments per year. So like maybe 14 payments. Do you have any advice on doing it that way if you don't have that initial extra assets to put towards the payments after you buy the house?
Most definitely. How long can you stay with us?
Um, I can just have you on. I'll be at work soon, but I
Okay.
can just listen to you. Mhm.
All right. So I'm going to finish this up, and then we're going to talk about how people normally do this. This was a special situation. The guy just had $100,000. He was trying to put it down as a down payment. And since he already had the money, I said, you'll be better off using it as a prepayment instead of a down payment. Does that make sense, Miss Rama?
Yes, it does.
Okay, so now you're asking, what if I don't have that a large amount of money? What can I do with my finances? Our In every situation, our average client who doesn't have large sums to put down still can pay off their loans in 7 to 9 years. Not just the mortgage, that's all of their debt. And I can go over that. And if for some reason you can't tap back in, you want to click the link at the top, and you can get a savings and earnings report. You can know the month, day, and year you're going to be debt free and how much interest you could save in with your current situation. But I'm going to try to get back to you as soon as we can, as soon as I finish up this current example. Okay, folks, here's where we are. All right. So the guy's trying to save PMI $81,000. Okay. He's trying to save 50. He's trying to save another 50 some thousand by putting his $100,000 down. We just showed by putting the $100,000 down as a prepayment, he instantly saves $110,000, knocks off 10 years, 3 months off this loan. All right. And at this point, he only has 19 years, 9 months left on this mortgage. That's it. A 30-year loan is reduced to 19 years, 9 months with $100,000 prepaid instead of $100,000 down paid. That makes a huge difference. Now, what about the PMI? Yeah, he still has to pay PMI, but for 1 month. He's got to pay that $227 one time, and then he can apply to have the PMI taken off, because the whole idea was to get the $300,000. He was going to use that $100,000 as a down payment to avoid the PMI, save 81 grand. But by putting this down this way, he can still eliminate PMI. He'll still have to pay it 1 month though. But after he's done that, he's done. All right. Just have to apply to have it taken off. All right. Let's see what else is happening here. By continuing to use the P.I.L.L method. Now remember, he's already knocked off over 10 years. He will pay the rest of the loan off in just 7 years and pay a grand total of interest only $30,000 for the entire loan. That's it. So he was trying to save $51,000 in interest. Doing it this way, he's only going to pay $30,000 in interest for the entire shooting match. And folks, this is what we're talking about. And guess what? Even though when he was a neighbor of mine, we never talked that much. But guess what? I'm his new best friend, because we saved him a ton of money. Folks, continue to share the room. All right, Miss Rama, I've got you now. We're going to talk about your situation and how we can help. But I got Credit Goddess on the stage. We want to shout her out for just a second. Credit Goddess, are you available to talk to us for a couple of seconds? Because I know she's always busy. So, Credit Goddess, as soon as you're available, flash your mic and introduce yourself to the people. Go right ahead, please.
You always catch me off guard. I was trying to find my phone and trying to get into the app. Oh my gosh. Hey, everybody. Happy hump day. Happy Wednesday. My name is Rosalora Lewis, also known as Credit Goddess. I'm all things credit. and the official credit expert for the Pill Method crew here. I'm a credit score improvement strategist. So not only do I help my clients repair their credit, but through education, I help them optimize and improve their credit so that way they can look apart to the creditors and lenders. Then apply the Pill method to save on interest costs over time. I'm also a business credit consultant as well. I help entrepreneurs and business owners establish business credit under their business to corporate credit so that way they don't have to leverage their personal credit. And also, I'm an educator. And if any of you guys are interested in my services, you guys can tap on my picture. There is a number in my bio where you can send your name and email address to, where you can get started on your credit journey, especially if you're credit challenged. And if you guys need any funding, I can actually help you with that as well. So far, I've helped Otis's student gain up to $1.2 million for their real estate endeavors individually, 32 students. So definitely tap in with me if you guys are interested in that. Thank you.
All right. Thank you, Credit Goddess. Miss Rama, you're up. You're up. Come on, talk to us. Tell us about your situation and let's see how we can help.
Okay, so I filed for bankruptcy a little bit over 2 years ago.
Mm-hmm.
I was living in the suburbs, as you know. Oh, sorry. Housing prices has skyrocketed quite a bit, and instead of continuing to rent, I decided to buy a house, but I knew it was going to be a challenge because I had filed for bankruptcy. So only program I was able to be able to finance a house through was NACA. Mhm. And through NACA, I was able to buy a house. And with them, they only require a smaller down payment for the house. But there were some repairs that needed to get done. So I paid all that money out of pocket. And now I'm trying to figure out how I could pay down the mortgage faster. My mortgage is with Bank of America. They do have a program through their bank where they discuss paying down the mortgage faster instead of for 30 years. But I just want to make sure that I'm utilizing the low payments that I have, because if I was renting, I would have been paying more. So I just want to make sure that I'm paying as much money as I possibly can towards the mortgage so that way I could pay it off sooner.
Miss Rama, listen, first of all, can we talk just a little bit about your situation and what you did and how valuable that is to everybody here? Because you did not let that prior hiccup, and that's all it was, that prior hiccup keep you from becoming a home buyer. That's number one. You found a program that's going to get you into a house, correct?
Correct.
And as things get more expensive, what happens when things get more expensive? What happens to rents?
Goes up.
They go.
Yes.
So you have guaranteed you've guaranteed your a place to live where the rent isn't constantly going up.
Yes.
Wow, wow, wow. And you're building equity as well.
Yes, I am.
Well, you are building equity the other way too, for somebody
What's
else.
the other way? Oh, yes. You mean they're building equity off of me?
Exactly. So listen, congratulations for that. That's number one. Okay. Number two is this. So let's take a look at how these loans work. So by paying biweekly, okay, you can save money, and you're going to make you're going to make 13 payments a year by paying biweekly, and you'll be able to save yourself at most 7 years, and the interest you wouldn't pay. So that's the most you can do, is save 7 years. Follow?
Yes.
My clients pay off in an average of 7 years. We're saving 23.
Mm-hmm.
Which sounds better to you?
The 7.
Okay. And we're using your current budget. Does that sound good to you?
It does.
And here's the best part. You don't have to sacrifice lifestyle to do this. We're not stealing money from your lifestyle to pay off the mortgage. You'll still be able to go on vacation. You'll still be able to have some fun because we're going to put your lifestyle budget as number one, not last.
It sounds good.
Okay. So you say now what else does it sound like? I know that sounds good, but what else does it just come on, you can be honest. What does it sound like?
It sounds a little bit impossible, but my ears are always open to different things, so that's why I'm here.
Listen, and that's what it takes, folks. If you want to do something different, you may have to learn something different. Let's learn and see what makes it so hard for. Can you give us an idea of the amount of money that you borrowed for this loan? It doesn't have to be exact.
Oh, it's $220,000.
Okay, so I'm going to put that on the screen. $220,000. Are you seeing my examples right now?
I'm not. I'm actually on Clubhouse.
Okay, so listen, if you can watch it later, okay? Because it's on. So it's $220,000. Okay, $220,000. And what's the interest rate?
2.75.
2.75. And is that a permanent interest rate?
Yes.
Okay, 2.75. All right. And is that going to be a variable rate or is that fixed?
Oh, fixed.
Yeah. Fixed. Okay. All right. So it's 2.75. So which means your principal and interest payment is $898.13. Just the principal and interest part. Okay. Or in that neighborhood. So that excludes taxes and insurance. So even now with $220,000 at 2.75, okay, here's what the bank wants. I mean, that's a phenomenal interest rate. But here's what the bank wants over 30 years, $103,326.
Mm-hmm.
Does that sound like 3% to you? 2.75?
No.
No, it's not. You know why? Because $103,326.80 is 46.967% of what you borrowed.
Yes.
46% of what you borrowed. That's what amortization does to a loan. But because amortization does that, I love what math can do to this loan. Because if the bank can use math to turn 2.75% into 46%, do you know math will work opposite of that? We can actually save money at the same rate they're charging you. Did you know that?
Yes.
All right, watch this. Watch how this happens. All right, so on the very first payment on this, $393.96 goes to principal, while $504.17 of your money goes to interest. Wow. I'm going to put a calculator over here. People need to see this, Ms. Rama. So what is actually happening here? So the bank does not care what your payment is. They care about how much of that payment comes to them. So if we take your regular payment, all right, it's $898.13. I'm going to take the very first interest payment of $504.96. And we're going to divide that by your regular payment of $898.13. That's 56%. 56% of your payment does nothing for you but goes to the bank to pay interest. Miss Rama, do you want 56% of your money to continually go to the bank?
Nope.
Nope. But here's what's great about amortization. If we do it the bank's way and let them dictate the timing we make the payment, we will pay that kind of money. But did you realize you can dictate the timing?
Yes, I did. But I don't know. I'm trying to figure out exactly how much I should be paying and kind of the details and the math behind it. So.
All right. Well, here's the basics of it right now. If we make that very first payment, okay, the very first payment, and let's say it's January. We make our very first payment in January. We don't owe anything until February, but February's principal payment is $394.87. It's a little bit more, and the interest payment is a little bit less on line 2. Okay. If I just look at the principal payment for the very next month, here's my question to you. Do I have to wait until the next month to give the bank $394.87?
No.
If I have it, can I give it to them in the same month?
Yes.
If I do, I'm paid down to line 2 already on my amortization schedule because all of that money goes to principal. I'm paid down to line 2 where I owe $219,211.17 already. I'm already on line 2. My next mortgage payment for February is actually on line 3 of the schedule, $395.77 going to principal, $502 going to interest. What just happened here? Instead of paying the bank $898 to get rid of line 2, you just gave them $394 to get rid of line 2. Line 2 is gone. You've just instantly turned 360 payments into 359 monthly payments by giving the bank that $394 early. And the interest cost on line 2, the $503.26, you never have to pay it. Now, here's the other part of your question. Do you understand that part first?
Yes, I do.
Okay. The other part of your question is, how much do you have to pay? And when do you have to pay it to save the most amount of interest? The quick answer to that is, I don't know, because there is no one rule of thumb that works for everyone. What we need to do is do the math on how much you're making, what your bills are, and how much money is left over after all the bills are paid. And that's called your discretionary income. How can we best use your discretionary income to eliminate the most amount of interest for you that's mathematically possible? So when we pay this money to the loan, so here's what's going to happen. I can give you kind of a overall sense of what's happening. We're going to put your entire budget into our computer program. We call it an opportunity cost calculator. If we put your entire budget in there, and number 1 on the budget is, how much money does Miss Rama want to spend on her lifestyle to create memories for herself? And do you have a family as well?
Yes, I do.
Okay, create memories for her family. Okay, how much money do we want to spend? We're going to plug that in. Then we're going to pay all the rest of the bills, plus put money away for retirement out of your income. Okay, and the money that's going for retirement, that's probably deducted out of your paycheck, correct? Ms. Rama, if you're
I'm sorry. Yeah, unfortunately I don't have a 401k yet.
Oh.
I do have stocks with my company,
All right.
but I haven't set up monthly payments yet.
All right, but you have that opportunity.
Yes, sir.
All right. So let's see. So we're going to make sure that we take care of those things. All right. And pay the monthly bills. Now, here's the other thing. You just want to pay minimum payments on your loans. What? Yeah. You just want to pay minimum payments on the loan. And then any extra money that you don't need to spend to take care of all these things, our program is going to prompt you to put that money in savings. And every few months, now we don't put extra money on the debt every single month. We're going to find the right time and the right amount for you so that when you take some money out of savings, you'll be able to apply that to the debt and knock off several months and save several $1,000s in interest each time you do that. But our program is going to calculate how much interest you save. And by that calculation, we're also going to be able to determine how much interest you are saving per dollar applied. Let me ask you this question. If we can figure out, and this is just an example, We can figure out we can save you $6 in interest for every dollar you apply to principal. That would be a good thing, wouldn't it?
Yes, it would.
But if you didn't know the difference, you would accept $3 in interest savings for every dollar if you didn't know the difference, right?
Yeah, unfortunately.
Yeah. But if you have a tool that can do the math for you to make sure that every dollar you put towards this mortgage is doing the most work for you, that would be valuable. And that's what we do. We measure your interest savings and make sure that every move you make, you're going to save the most amount of interest per dollar applied each and every time. And so what we need to do, what P.I.L.L method stands for is prepayment of principal, isolating the principal amount, leverage, and liquidity. Prepayment of principal, we know what happens there. You're going to prepay principal. But we're going to add something to that. You're going to know how much interest you save each and every time, whereby we don't know that now. Okay? Number 2, isolating the principal amount. What is the least amount you can pay, and when do you pay it to increase your interest savings? Ms. Rama, do you want to save some money in interest, or do you want to save the most amount of interest that you possibly can?
The most amount.
Okay. So, and does it make sense to you that we have to do a ton of math to figure out how much to pay and when to pay it?
It does. That's why I'm asking you to do the math for me.
and even I can't do it. That's why we built a computer program that does it for us. Okay. And when we plug all that in, the program says, here's how much to pay. Here's the month to pay it in. Here's the day of the month to pay it on. Here's the right loan to attack. And if we do that, you will save the most amount of interest that's mathematically possible for you and your family. Now, your neighbor will be given different instructions. So if people, some people who read my book, they're looking for that one thing or two things or three things that everybody can do to save interest and to save time. There is no one size fits all for this, folks. There isn't any. It doesn't exist. It doesn't exist in anything. You want to move the right amount of money at the right time for you so that you can save the most amount of interest. You don't want to just save some. And if you save more interest using your current budget, generally you can be out of debt in 7 to 9 years. Ms. Rama, is there any other questions I can answer for you today?
No, there's nothing right now.
Okay. So if you want to know more about this, would you like to know the month, day, and year you could be debt free?
Yes.
All right. So you could go to the link above, click that link, and there's a button there that says get a savings and earnings report. Follow the directions and put in your financial data. Someone from my staff will contact you. Will contact you. And then we will be able to share with you the month, day, and year you'll be debt free, not just on the mortgage, but on all of your debt. And it's an average of 7 to 9 years. Some people a little less, some people a little more, but that's an average. But it's still a lot better than 30.
Yes, it is.
All right.
Thank you so much.
You're so welcome. And thank you for coming to the stage. We do appreciate you. Folks, listen, does anybody else have any other questions? Listen, we're building up. I want to thank you for 18 shares. We now have 34 people in the room, all because of your sharing. Continue to share the room. Does anybody else have a question or comment? Are you trying to buy a home? Are you trying to save money? Do you want to know the best way to get into real estate investing? Listen, this is all things about your money. It started with, do we make large down payments with our money? The answer is no. Miss Dawn, will you please, are you available right now?
Yes, I'm good.
Will you please introduce yourself to the folks and tell them why why we love your information so much? Go ahead and introduce yourself to the people.
Sure. Hello, everyone. My name is Dawn Robinson, the Money PhD. I'm a financial educator, single mom of twins, turned millionaire by age 44. But that was not without making a few money mistakes. I found myself in $140,000 in consumer debt, and paid it off in 17 months. I own 7 homes, 5 are free and clear. And now I'm on a mission to help other women 40 and over that start late, that are starting late, finish rich. So this is Dawn, and I'm done speaking.
Thank you, thank you. We have a question online, and actually, Lady Miz is right here with us on Clubhouse as well. She wants to know, how long would it take her to pay off $100,000? The quick answer is, I don't know. The average answer is probably somewhere between 5 and 7 years, depending on how much you're already making, Lady Miz. That's why when we put everything into the calculator, we're going to be using a process that's similar to GPS for your money. Now, what does that mean? If I use a spreadsheet, I would be able to put in, let's say I figure I want to put in $300 a month extra to pay off the loan. And if I use a spreadsheet, the spreadsheet will tell me when I'm done. Okay, let's just say I can take 30 years and turn it into a 15-year mortgage. I can pay it off in 15 if I pay $300 extra a month. Okay, now the problem with a spreadsheet is this. Let's see, 15 years, that is 180 payments. That means, all right, that means we would have to make 180 payments and not miss one if we use a spreadsheet. And a spreadsheet does not take into account the hot water heater's going to blow up. There may be got 2 flat tires at one time. We may have to fly the entire family across country at the last minute to say goodbye to Aunt Martha. Those kinds of things pop up. And if you're looking at trying to pay $300 a month every single month for 180 straight months, not missing one month, it's actually impractical. That's why spreadsheets don't work. You want a program that takes whatever's happening in your life and says, whatever happens that month, we're going to give you financial instruction on how much money to move based on your current bills that month. And next month is all going to change. So we need new instructions based on what's actually happening in your family. This is why you need a program that acts like a GPS unit as opposed to a spreadsheet. Lady Miss, thank you for coming to the stage. How can we help you today?
Good morning. I spoke with you about a week or so ago. You gave great information. For me, I still find that I'm like kind of struggling a little bit. So my main question to you is, do you have something where you do consultations or someone could hire you to help with a strategy? Because it's not just like I have 2 mortgages. Well, I have 1 mortgage and I have a home equity loan and I want to pay both off, but I also want to get into purchasing more property. So I kind of want to look at my entire financial situation and understand what is the best way for me to move forward to achieve my goals.
Yes, we do provide those services. And here's how it breaks down. If you will click on the link that we talked about and get a savings and earnings report, fill all of that information out, follow all of the instructions. Someone from my staff will get that information, confirm it with you over the phone, and then set up a consultation. I know. Yeah. Go ahead.
I did just do that, but it keep asking me for a code, and I'm like,
all right, let me okay, right above where it's asking you for a code. Okay, if you read that, it says when you click the button to confirm, wait for the code. We're sending it to you as a text message.
Oh, I ain't got my phone in front of me. No wonder. I'm like, where's the code at? I'm on my iPad.
Right. So we're sending it to you as a text message, and you click it one time, and then so start that process all over again. Okay, just get out of it, start it over again, because every time you click it, you're getting a new code, and the first code you receive is no longer active. So start the whole process again, and then when you click that one time, wait for the code to be sent to you as a text message. That's what's right. That's why I said read all the instructions. So it's right above where you click on to confirm your telephone number. Get the code, put the code in it, and then you click on get a yes, I want to save now, and it will let you into the financial form. How's that, Lady Miss?
That's perfect. Thank you so much. I'm going to be doing that now as I'm getting ready for work, and I'll just be listening and tuning in. I appreciate your room.
Ooh, and listen, we appreciate you because I remember you from about a week ago.
Yes. And I was like, oh my God, I gotta, I mean, I'm sure I'm not the only one. Sometimes you come in, you get the information, but you're kind of like moving and, grooving, and you're not really totally retaining, but you need that extra step and that help to help you really, move forward in achieving your goal. So I'm looking forward to it.
All right. Listen, we just invited King Charlie Prince to the stage. He has raised his hand. Let's see what he has to say this morning. King Charlie, if you can hear me, we're trying to bring you up right now. All right. I invite you to speak. So come on up and say your piece. Lady Miss, thank you so much for your contribution to the room this morning. Does anybody else have any? Listen, Miss Carmen, I see you out there with your party hat just coming onto Clubhouse. All right, folks. Ms. Carmen, if you have a question or a comment, listen, sometimes when people are new to Clubhouse, because they're new, no one wants them to speak on their stage. I want you to know that because you're new, we love new people on Clubhouse. So if you have something to say, go ahead, find out where you can raise your hand, and we'll be glad to talk to you, even though you're brand new to Clubhouse. All right, so let's do Miss Carmen a favor here. Hello
Can
there.
you hear me?
Yeah, we can hear you.
This is King Charlie Prince. Listen, let me ask you something, right?
Could you hold on for just a second, King Charlie Prince?
All right.
All right, because I want to do something nice for Miss Carmen here, who has no followers. All right, so find Miss Carmen on the stage, folks, and go ahead and give her a follow. Give her some digital currency this morning. And let me be the first to follow her, and I'm going to follow you, Miss Carmen. And if anybody else would give her a follow as well, so she can kind of learn the ropes, I'd appreciate that very much. King Charlie Prince, how are you doing, sir?
Everything is good.
Talk to me.
Okay, let me ask you a question, right? Okay, I own a house in Virginia, right? And is there a difference between a legal title and a allodial title?
I don't know. I really don't know. What's prompting your question? Let's get to that, because we do have some real estate agents on stage in the room, and maybe they can answer your question. But what's prompting your question?
Because from my understanding, when I look up the allodial title, that means you don't have to pay taxes.
Here's the thing. King Charlie, there are a lot of theories out there about paying taxes or not paying taxes and legally avoiding them. Here's what I found out. Most of that stuff out there is internet myth and will get your house taken away from you. Okay, be careful with that information. The other thing is there are some people out here, because of their status, because of their military status, because they may have some sort of disability, or they live in a particular zone that would exempt them from property tax. That you can bank on. The rest of that stuff is internet myth, and you can try it if you want to, but they're going to come and somebody is going to buy your house for $327 in unpaid taxes.
But you see the thing, I read in the law books.
Like I said, King Charlie, here's what I'm trying to say is that's what I found. And that's the position we're going to take on this stage. Be very careful with information you get from the internet and from the law books. And I would hire myself because, see, I can read law books all day. I'm not a lawyer. That's why I hire lawyers to read that and interpret it for me. And I'm going to stay on the right side so somebody doesn't come and buy my house for $300. That's all I'm saying. Okay?
Okay. All right. Oh, I paid the taxes though.
Okay. Well, I'm glad you do, because I'm telling you, there's a guy out here that's, listen, tax deed wolf. Don't let him hear you say that you didn't pay your taxes, because he's going to come in and swoop in and take your house.
Oh, okay.
Okay.
All right. No doubt.
All right, King Charlie. Do you have anything else for me today?
Nah, that was the only thing I wanted to ask.
All right, man. Because listen, we only promote the truth here. Listen, nobody gonna come and say Don said you don't have to pay taxes, and they lose their house, and they come back to me and say Don said and we're not gonna let anybody else say it on this stage either, King Charlie.
Well, that's right.
Listen, man. Thank you for listen. But because you asked that question, you helped out some people who may be reading the same type of information. And I'm telling you, I mean, there are people on there, not only, I mean, they put up stuff that they do whole shows on this. They sound credible on the internet. And you know what they say. Somebody says, I know it's true because I saw it on the internet.
I don't be falling for the internet because they can always mix things up,
They do, King Charlie. But thank you for bringing that to the stage. Do you have any other question for me today?
Nah, that's basically it.
Well, listen, we're gonna let you hang out for a while because you brought something valuable. So we'll let you hang out. If something else comes up, you have another question, please feel free to come off mic and ask your question. Okay?
No doubt.
All right, thank you, sir. Coffee Brown. Coffee, how are you doing this morning?
Pastor Don, good morning. Don, I've missed you. I don't like being without you from Sunday to Wednesday. It's a lot.
I know, Coffee, because we were out of town, and it was so difficult for us to do the show. We missed Friday, we missed Sunday, but guess what? I'm going to be in Atlanta. This Sunday, but I'm going to do the show from my hotel room this Sunday because you're not the only person that said that.
Yeah, so, I was sitting here, I just, while we're growing and evolving and stuff like that, and I just, what, Don, honestly, it made me just appreciate and value you more. Sometimes, missing somebody is a good thing. So it just made me appreciate and value you more for sure.
Wow. Okay. So absence does make the heart grow fonder.
Or confused. One of the
two. Coffee Brown, tell us, listen, introduce yourself and tell the folks who you are, please.
Absolutely. I am Coach P. Coffee Brown. I am pretty much a marketing strategist. I am a licensed insurance agent focusing on helping families to understand their risk assessment and getting them properly dealt with according to where they are in life and future aspirations and goals and all that kind of good stuff. So that's what I really do. I have some other businesses that I mentioned in, of course, and I have a publishing house, and I can't emphasize enough the importance of having a published work. So anybody in this room, if you are in a business, you must have a published work in your field of expertise. You need to be a SME, a subject matter expert, and we can help you to do that through a publication. That's what makes Don so powerful. And he's getting ready to release a second publication. I was excited about that. And it's imperative that you understand that books are one of the 10 ways to generate wealth, longevity, long past thousands and thousands of generations after you're gone. A book will be here. Perfect example, and I'll yield my mic. There's a book called The Laws of Success in 16 Lessons Complete by Napoleon Hill. It's for salespeople for the most part, and he wrote the book in about 1914 or something like that. Here it is, 2022, and I am taking it to one of my business partners for him to ingest the information so that we can continue to scale his business. But I said that because that is over 100 years ago, and I'm using that publication from somebody that wrote it 100 plus years ago. So think about it. Somebody is getting paid from that person's work, and he's been gone for a number of years. So you think about that the next time you decide that you're not going to have a published work. I'm Coach Coffee, and remember, you can never have a good conversation without a great cup of coffee. I yield my mic.
Coffee Brown, thank you so very much for that, folks. Listen, I got to stop here and talk about it. We have a book. She just mentioned that we're working on a second book, but let's put that on the screen right now. I had an opportunity, all right, to share this book. Let me tell you what's so powerful about this particular book.
I have that book too.
You say what, Charlie?
I said I have that book too.
Well, which one? The one Coffee was talking about?
Law of Success. Yeah.
All right. Thank you, sir.
Do you have Don's book, Charlie?
No.
Okay, Don, go ahead, because he needs your book. He needs your book. You're alive and well on planet Earth, so he needs your book. Go ahead, Don. I thought he was talking about your book.
All right, let's go ahead. Let's talk about that. So, folks, here's the thing. My book, The P.I.L.L Method, A Better Way to Eliminate Debt. All right. And here's the miracle about this book. I didn't read an entire book all the way through until I was 46 years old. Okay. Because of because of being autistic and having ADD, it was very difficult for me to sit down and read something all the way through, to be able to focus. I didn't have the ability to focus. So after a while, I've learned how to do that. But I was 46 years old before I read a book all the way through. And a guy that never read a book until he was 46 now has a book. That is amazing to me. And not only that, but it's the only book of its kind on Amazon. There's over 33 million titles on Amazon right now. And this is the only book that goes through and teaches you how to read an amortization schedule and tells you why it is important to be able to read one and how you can beat an amortization schedule using technology. It introduces you to the technology that is needed to optimize your interest savings. Okay. So you want to give something to your children, give them this knowledge. All right. Get the book today. All right. It is the P.I.L.L Method, A Better Way to Eliminate Debt. If you want an easy link, you can go to my 10K card up above, click that link, and you'll see a button that says get the book. All right. So get the book from Amazon today. And I had an opportunity to share my book with another author who's written several books, who has a brand new book out today. And he has a publishing deal on this new book. For the first time in his life, his other books were self-published. This one, he has a publishing deal, and it's in bookstores across America. It's none other than E.T., the hip hop preacher. We were able to share, I was able to give him a signed copy of my book. And then, but that was after he mentioned he paid off his mortgage using this program. He's the number one motivational speaker in the world. Okay. And if the number one motivational speaker in the world who commands speaking fees upwards to $150,000 an hour uses this program, What do we need to do, folks? And we're going to play that video for you right now. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L Method. I invite you to watch and listen.
Listen to me, y'all. One of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerve, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today. You heard it, folks. No mortgage, no stress. Oh my goodness. And I have a picture of it of my wife and I were standing there with E.T., the hip hop preacher, handing him a signed copy of my book. And he went on to say that he uses the P.I.L.L Method to pay off his loan. And you know what? I did not know he was going to say that at the time. I did not know it. So this was an unsolicited testimonial given by the #1 motivational speaker in the world right now. And if you go ahead and you can test this out on your own. You put in like the top 10 motivational speakers for 2022. Okay. So you want to narrow that down. So if you put in 10 top motivational speakers for 2022, E.T. is going to be at the top of most of those lists. He'll certainly be in the top 5 on the rest. So folks, here's what we're talking about today. We want you to know the truth about loans. And one of the things that we do, we want to explode the myths. And one of the myths we exploded today was putting large down payments on any loan. Now, that would go for mortgages. We saw that. Now, here's another situation you may not have thought about. Okay. What happens if I total my car, and then I get paid out on my car from the insurance company and I need to go buy another car? What do most people do with that insurance check when they go buy their next car? What do they do with that insurance check? This is going to be lovely. Don't put a large down payment on any loan, especially a mortgage, but we're going to go over that. Does anybody know? Listen, does anybody want to tap in? I got an insurance check because my car got totaled. What do people do with that insurance check when they go buy their next car? All right. You can put it in the chat. You can come to the stage. All right. What did we do? Does anybody want to tap in on that? All right. Norman says they make a down payment on the new car. They make a down payment on the new car. So I'm going to put something on the screen right now. We're going to put in 40. It says they put all the money down on the car. Doris, that's exactly what they do. All right. All right. So here's what we're going to do. We're going to put in $40,000. Okay. For a car. We're going to put in $40,000. Okay. Let's see. Oh man. Okay. I guess I'm out of touch. Okay. I'm getting the word now. We need to put in a $50,000 car. Okay. $50,000 car. We're going to put it at 4% interest. And here's the other thing, folks. All right. Do not lower the term when you're getting the car. I want to get the car for as many months as they'll give me. All right. 84 is generally the max, 84 months. Some people can't get 84, but on most new cars, you can get 84 months. And so we're going to do this for get this loan for 84 months, but we're still going to pay it off early. So if I can pay off a house in 7 years, you know I can pay off a car a lot sooner than that. Okay. So let's go ahead and put it in for 84 months. Okay. $50,000 for 84 months at 4% interest. The payment is $683.44. So I am going to put in, we're going to also, let's see, we're going to open up a new tab and we're going to duplicate this tab. Now, somebody says, I've got a check for $20,000. So if I got a check for $20,000, I can take that $50,000 and I'm going to put $20,000 down. So I'm going to get $30,000. I'll have a loan for $30,000 at 4% for 84 months. All right. By putting $20,000 down, here's my payment. Ooh, $410 a month versus $683. Oh man, that's like $270 cheaper each month. Okay. Now, but remember, it's for 84 months. Watch this. All right. So what we're saying is, do we put down a down payment and get this $410 for 84 months? Or do we keep the money back and have this $50,000 loan? Now, here's what I'm saying. Get the $50,000 loan, right? Watch. Oh, look at this. I also need to point this out. On the $50,000 loan, just take a look at this, folks. If you're new to the room and you want to see these examples, please go to the top of the room here, click on the link, and you're able to click on Watch Us Live. And you can choose which platform you watch us live on by clicking that link. All right. If you want to go straight to YouTube, go to ice10kvideos.com and you will be able to see it as well. That'll take you straight to YouTube. Now, at $50,000, all right, the total amount of interest that we're going to pay on this loan is $7,408.96. If we get the $30,000 loan, okay, now this is going to be some good math. We're going to cut that down to $4,445.04. $4,445.04. Watch this. All right. We're going to watch that and we're going to do a little bit of math here. So I'm saying, why don't we do this? Get the $50,000 loan. All right. We still have our $20,000. When we make the first payment, do you know we can prepay the $20,000? So if we do that, that would go over here in the cumulative principal line, and we pay the $20,000. We go immediately in the first month down to $20,000. We knock off 3 years off that loan instantly. How much interest did we just save? $4,900, $4,973.52 of, watch this now, watch this. Okay. $50,000. Now they wanted $7,400. Okay. This is great. This is great. I'm going to bring up my calculator. Okay. They wanted, okay, 7,000. Okay. All right. $7,400. $8.96. All right. By putting $20,000 as a prepayment on this loan, we just saved ourselves, let's see, actually it's up here, $4,872.62. So let's subtract $4,872 $72.62. All right. Boom. Now all we have to pay in interest is $25.36.34. If we had put it as a down payment on the on this $30,000 loan, here's how much interest they would have wanted: $4,445. We're already paying less interest. Watch this. Bring it back. We're already at $25.36.34. That's how much interest we have left if we don't do anything else except make the minimum payments on this loan. That's all the interest we're going to pay. So why would you ever put it as a down payment when you could put it down as a prepayment and only have $2,500 in interest left to pay, as opposed to putting down a down payment and start a 30-year loan on payment a $30,000 car loan on payment number 1 for 84 months. Wow. Never take your insurance check and put it down as a prepayment on your car loan. Never use it as a down payment on your car loan. Does anybody have their hand raised? Does anybody have any questions about what we're doing here in terms of when you get that check, you get that insurance check, using it as a prepayment instead of a down payment? Does that make sense to you? Can I see anything in the chat at least? Nobody wants to come to the stage and talk to me this morning. I love it when people come to the stage and talk. All right. Ask your question, make your comment. King Charlie, are you still there? Because, I mean, people get busy.
Yeah.
Okay. Did you hear what we were just talking about?
I was listening.
Does that make sense to you? Have you ever heard of anything like that? People taking that insurance check, instead of making a down payment, they make a prepayment and save a ton of interest and time?
Nope.
What are you going to do if you're in that situation?
Shit. Good as mine.
Come on now. See, this is what we're talking about. And Charlie, this is something that is for real, okay? Because when you put that money down and you knock off 3 years off a 7-year loan instantly, how does that make you feel using the same amount of money?
Kind of messed up.
I'm telling you, man. Listen, we've been doing things backwards, haven't we?
Yeah, definitely.
And listen, as long as you've been doing this, and it looks like you do some research, right?
All the time.
All the time. Have you ever heard anybody else in person or online explain how loans work this way?
No.
Huh. Does it make sense to you that this is probably the right way to do things?
Yeah, pretty much.
And I'm wondering, why isn't anybody else talking about it? Because there's some gurus out there. I mean, there's folks like Dave Ramsey, and there's folks like Susie Orman, and there's other folks that are online right now that have millions of followers, but they're not teaching this. Why do you think that is? Lady Miz.
Just about to ask.
Lady Miz, you just came off mic.
No, I came off mic. What's up, King? I came off mic because, well, one, I was a big Susie Orman fan. And I learned a lot from her. Like, I knew about credit, I knew about a lot of stuff, but I never really understood this method. So I'm curious to know, people like that, even people that I learned a lot from, why don't they speak about this, or why do you think they don't?
Okay, I'm going to put it in terms that you might understand, Lady Miz. Okay. Do you have anything to do with the music industry?
Yes, I do.
Okay. Now, you just had a track come out not too long ago. Okay. All right. So now I got a new track coming out. Okay. but I sampled yours.
Ooh. You hear that, King Charlie Prince?
Yeah.
I sampled yours, and I put a whole new track out there, and I'm making money off my track, but I sampled yours.
Oh, I got it.
What is there something wrong with that, Lady Miz? Talk to us.
You're stealing people's material and passing it off on your own. So you probably are lacking some information that you don't really, you know what I mean, know to be able to pass on. So basically, but to answer your question is you're taking other people's material.
Ooh, and what you gonna do about that, Lady Miss? What you gonna do about that? Then I sampled your stuff and I got it out there and I'm making money on it. Come on, you're still you're on mute, Lady Miss. You got to come off mic. Come on, what you gonna do to me?
Oh, so I was talking the whole time. I didn't realize I was on mute.
Come on, what you gonna do to me?
I mean, you can sue.
Yes.
You can go after the person.
Yes. All right, because that's happened before. See, we're talking about your intellectual property. We're talking about something that you have the copyright on. You own that. Okay. And I'm going to come along and I'm going to co-op it. And then I'm going to try to make money on it. This is why they can't. See, I didn't get this information from somebody else and I didn't glean it from the internet. I didn't glean it from YouTube and then package it up on my own. God gave me this and I put it in a book. And I've copyrighted it back in 2000. I copyrighted the whole thing back in 2010. I own the copyright. I wrote the book 2 years ago. And so if they are going to teach this the same way I'm teaching it, what would they have to do first, Lady Miss?
Can you repeat that? If they're going to do what?
If they're going to teach what I'm teaching, all right, the same way I'm doing it, and I own the copyright, what will they have to do?
They have to come to you to get permission. That's
the answer to your question. They have not come and asked for permission.
Oh, okay. Wow. Okay.
So listen, folks. Lady Miss has got the track out there. Listen, and who is on that with you, Lady Miss? I forgot the guy's name.
The feature is Lot Picasso.
Okay.
He's an artist from Queens.
Oh,
and me and King Charlie Prince got some songs together too.
What? Come on now.
Listen, King Charlie Prince is a hip hop legend. He ain't. You know how we all say the roof is on fire. I'm not gonna lie. I use that in one of my rap songs. And he's the originator of that song.
What?
Yeah, that's me.
King Charlie, listen, man, you can't come to the stage and keep that under wraps. Listen, folks. Listen, this is not a music room, but listen, Lady Miss, you go first. Tell us who you are, what you do. Tell us how we can get, if anybody's interested, how they can get that new track of yours. Come on, talk to us, and then we're gonna bring up King Charlie.
Yeah, so I do a few different things. I'm a songwriter and creator. I put out all different types of music, so I'm very versatile. You will hear everything, but I'm more of a conscious rapper. But this last track is more for the grown and sexy. It's called Riding. And I put out a few books. I have my own publishing company, and I also have my own potato chip company called Boss Move Chips. So I'm kind of moving and grooving, and obviously I'm into real estate. That's probably my main thing as far as where my heart is at, because I know that's where the real money is at. So,
and them chips is good too.
Yeah, Charlie Prince always purchased my chips, and I appreciate that. And he got them in the stores by him also. So I am definitely looking to get them into more big chain stores, but they're in like the corner stores and things like that. So
wow,
I'm excited about that. And again, my songs are on all streaming platforms. You can hear it wherever you listen to music. If you type in my name, Lady Miss, it'll come up on YouTube. You can see I have a lot of conscious rap music on there because I was listening to Boyce Watkins a lot, so I had to make some some music for the people. You know what I mean? But yeah, I'm definitely if you Google me, my website, everything is there. And thanks for giving me that opportunity to say
listen, Lady Miss, listen, I got a couple more questions for you, but then I'm coming to King Charlie. Lady Miss, you said, though, you put this out. are you on a label? Do you own the label?
No, I'm my own label.
You're your own label.
Yes, yeah, I have my own publishing company and everything like that. So, and I enjoy that because for me, the best way that I can put it is you have to know what it is that you want to get out of this. I don't really want to be the person that's traveling all over and doing things like that because I have other stuff that I want to do, but I still like to create music. So I create music, I work with other artists, I let it stream, I make a little money here and there off of that. And for me, it's more about sync licensing, like getting my stuff on maybe video games and TVs and commercials and movies. That's where I'm heading. I'm not really heading for the running around performing and things like that. That's not what I'm trying to do.
Wait a minute. You mean every time I hear a commercial and I hear a familiar song, somebody's getting paid because they own the rights to that song?
Yes, that's called sync licensing.
and let me get this right. Instead of the label getting that money, that you're on somebody's label, you own it all, and you get paid.
Exactly.
Dang.
As long as you're if you own the masters, see, that's why you pay attention to masters and publishing. So if you look at a lot of the big time industry artists where they complain, where like even people like TLC and things like that, and they were like, hey, we got all these Grammys, but we're broke. They didn't own their material. They didn't own their masters. They didn't read the contract. I forgot to mention this, which is very important, and you're more than welcome to come on my podcast. We also interview a lot of different entertainers and people who are creators of services and products. And my podcast is called From the Ground Up Productions. Is where creators meet. So what we interviewed Sweet LD. She used to be the dancer for MC Hammer and MC Hammer's artist. And he didn't pay them. So they were on Arsenio Hall. They were doing all this stuff, traveling, and they were making so much money. And she said, I hate when people, and I hate to say this, but you could check out the interview, guys, if you want. It's there. She said, I hate when I hear people say, MC Hammer took care of everybody because he never paid us our money. And they signed the contract on the airplane with no lawyer. So the music business is so, it's a very grimy business, and you really got to understand and know your stuff, like how you're teaching us about, the P.I.L.L. You got to know your stuff when it comes to the industry, or else you could get got.
Woo, Lady Miss. Listen, I want to tell you before I go to King Charlie, I would love to do your podcast. All my information is up there. In fact, there's a link down. One of the links is, get down to do your podcast. Fill out that information. I would love to do that. Or hit me up on my Instagram, and we'll make it work. Okay.
Oh, beautiful, beautiful. Thank you so much. Yes.
All right, King Charlie, talk to us, man. Who are you, and what do you do in the industry?
I produce. I rap. I've been doing this since 1980. And you probably heard my song Request Line. DJ, please pick up your phone. I'm on the request line.
That's you.
That's me.
No, man.
Oh, yeah.
Come on, people. Listen. Listen, I do appreciate y'all coming in here. And so, man, listen, talk to us some more. Introduce yourself to the people, folks. Go ahead, King Charlie.
I've been, I traveled around the world several times, did shows, concerts with a lot of other artists. We did The Roof Is on Fire, which became one of the popular sayings around the world. And Tyler Perry used it, Eddie Murphy, Chris Rock, who else? Steve Harvey, Eminem, people that do rock shows, they use it. So it's like it keeps the money coming in, the royalties, because I got it on lockdown. You know what I'm saying?
Oh boy, I'm telling you.
You know what I'm saying? So yeah, I've been doing it for so long, and I never gave up because this is what I love to do. And when I heard Lady Miz, I was like, oh damn, she sounds real good. So that's when I said I got in contact with her, because I wanted to, do something with her too as well, because she had that energy, and I worked with a lot of other people as well, because I like putting other people on, because the more I put people on, they keep me going. You know what I'm saying? I was with a group called Rockmaster Scott and the Dynamic 3 back then, but they slowed down. They didn't want to really do it anymore. And I said, you know what? This is my passion. I love doing it. So I kept doing it. And I still got stuff out now. I got like 5 albums out right now. We have a song, me and Lady Miz, called By Any Means Necessary. It's a knowledge song. It's like, if you ever heard Self-Destruction, well, it's just like that, you know what I'm saying? And we dropping knowledge on it, and we did our thing. We passed the information out, and this is what I do.
Wow, man. Listen, thank you very much for coming to the stage. Listen, we got celebrities on the stage, and I listen, folks, I gotta admit, I was never really in the hip hop scene, so I don't recognize all the artists. You guys recognize them, but I didn't. So I am so glad, listen, that this information came out today. And I am so appreciative of Lady Miz, King Charlie Prince coming to my stage and putting this up. And Credit Goddess, I saw you flashing your mic. Credit Goddess, you know these folks. You should be helping me out, understanding who I'm talking to. So, Credit Goddess, listen, if you're on mic,
I am.
Listen, you know this stuff. You need to help a brother out.
And you definitely need to know the business. That's when we started in the business, we learned quick, because when we traveled, we was asking questions, with other artists. And then when we got back, we started asking the producer questions, and he didn't like that. So we went and got a lawyer. And he took care of everything.
Wow. Listen, folks, you only need to hear those stories, so many times before you start doing things right, especially in this industry. Listen, go ahead. We got just a few minutes left. Share this room, get in here. And listen, I need you all, King Charlie, Lady Miz, tell us how we can get that track that both of you are on. Tell the folks how they can get it. Lady Miz, come on.
Can y'all hear me? Because I'm in my car now. I'm
Yeah,
on my way to work.
We can hear you.
So they can get it on the platforms. If you listen to iHeartRadio, Spotify, iTunes, whatever stream. You can definitely find that.
Okay, Lady Miz, you know what we need to do? We need to come in and do a special show, because this is all about money. Okay, this is all about money. Yes. Would you like to come back and talk about if there are any aspiring artists out here? Because it's all about money and how we use it, right?
Yes.
If there are any aspiring artists out here, can you come back and talk about how they can set themselves up and protect their not only their intellectual property, but their money as well?
Absolutely. And you know what's so funny? I just did like a quick little video. I try to keep it under 10 minutes where I'm teaching people how, I didn't upload it yet, but how to learn about the business and all of the things that they need to know as far as getting their paperwork in order. So I would be glad to come back and do that. And I also wrote a book called Indie Artist Struggle. And that book has a lot of the things that I've learned along the way as an independent artist. So, and I wouldn't mind coming on and doing that. That would be an honor for me to do so.
Well, listen, we're going to get you taken care of. Do you have your own 10K card yet?
I do not.
We're going to get you one.
Linktree.
Okay, we're gonna get you a 10K card, because I'm sorry, Linktree is okay, but we can't allow it in this room. Sorry.
Oh, oops. Well, you're gonna have to school me, because I don't even know the
Listen. I'm gonna have my team build you a 10K card. Okay.
Oh, okay, great. Thank you so much.
All right, and I'm gonna send that over. It's King Charlie. We're gonna try to get this coordinated. So if you could be in here and help us out understanding the music business from your point of view, because listen, I don't know anything about it. But if we can help aspiring artists not only make the money And then when they go out and invest their money and buy homes and get into real estate investing, let's combine this vast knowledge and see how we can help more people out. I would love to have both of you on the show talk about how to make the money, preserve the money, and then I can add in how you use the money. How's that?
Sound like a plan.
Sounds like a plan. And let me just say this too. And I don't want to put too much out there, but what you're saying is so amazing, because I had an idea for a show specifically that was around what you're talking about now. And I was looking for the right people to do it, but it definitely has to do with real estate money, and it has to do with musicians. So this is really great. I'm excited about it.
I'm excited about it too, and it's going to happen. We're going to make this happen this week. Please, I'm going to hit both of you up on your Instagram. You guys hit me up. We're going to listen. I've been waiting for a long time to say this. You ready? I'm going to have my people talk to your people.
I love it. Yes. Let's do it. I'm driving right now, so when I get to my main location, I'll make sure that I hit your Instagram. But I just wanted to let you know that, because I'm in the car, so I can't,
I understand. Coffee Brown, are you still in the house? Are you back? Are you at work at your desk? All right, because if you can say something, please do. We're getting ready to jump up out of here. We've been here for 2 hours. Listen, we started out talking about one thing, and my goodness, how God puts things together. And we had some talent come up in here. We have some people who are in this business, and it's all related. It's all around money, folks. We want to not just make the money, but we want to learn how to use the money. We want to know the rules. If you don't know the rules, as Lady Miz said, you're going to get got. All right. So let's not go down that road. All right, ladies and gentlemen, my name is Don Daniel, founder of P.I.L.L Method International, a better way to eliminate debt. And for the last 2 hours, we've been talking about how we can better understand lending, how we can better understand money, how we can keep more of our money in our pocket and not get got by the banks. You need to know the rules. We have a book out that talks about this. We have celebrities that are using the P.I.L.L method, and hopefully we're going to be able to have even more celebrities using this methodology. And we're going to get together and do some, we're going to trade podcasts here. We're going to go on Lady Miz podcast. She's going to come back and talk about the music industry in here and how you can get set up. She has a book. King Charlie has information to put in here on this. And so we're going to put it all together for you, folks. We're going to not just talk about lending. We're going to talk about money in general and how we need to understand it, how we need to make it, and how we need to use it. So listen, folks, we're going to tap out of here. Please follow your moderators. Follow the club. Go to the greenhouse up above. Follow the club. Follow me. And anytime I'm talking about money, you need to be in the room. We're going to be back here on Friday. And on Friday, folks, we're going to be talking about, all right, watch this now. The smart mortgage. You've heard of smart homes. You've heard of smartphones. You've heard of smart TV sets. Okay. This is going to be the smart mortgage that pays itself off in 7 to 9 years. The smart mortgage is coming to you this Friday. Let's see you back in here. We're going to end everything else off with E.T., the hip hop preacher, and I'll see you again on Friday. Goodbye, everybody. My name is Don Daniel, founder of P.I.L.L Method International, and our team created the most powerful money management, wealth building, debt elimination system ever created. At our recent seminar in Nashville, Tennessee, the keynote speech was delivered by the #1 motivational speaker in the world, Dr. Eric Thomas. E.T., as he's also known, mentioned he paid off his mortgage in 4 years using the P.I.L.L method. I invite you to watch and listen.
Listen to me, y'all. Well, one of his mentees took us through one of their programs, and I paid off my mortgage. But guess what happened? My marriage went to a whole nother level. And you know why? Because my wife is a security freak. And even when I blew up, my wife would be like, oh, you blew up, but how long is you gonna keep making this kind of money? I was like, I don't know, forever. She's like, you sure? Because I'm gonna keep my license as a nurse just in case you don't. So when I paid the house off, my boy was like, you ain't gotta do that, you can do this. But when I paid the house off using that program, it took the stress level all the way down for my wife because we no longer had a mortgage. Does that make sense? That thing that was coming every month, that was getting on her nerves, we didn't have that no more. And so she was at rest.
Did you hear that? No mortgage, no stress. If you would like to become debt and mortgage free within an average of 7 to 9 years by cutting your interest costs by up to 75%, go to pillmethod.com and request a savings and earnings report today.